It's Friday, May 16th, 2025. Breaking news. Tonight, the U.S. just got financially grounded.
We have a news alert for you. Moody is lowering its credit rating on the United States debt one notch to AA from AAA due to increasing government debt and interest payments, but improving the outlook to stable from negative. Moody's doesn't think the current fiscal proposals being considered will result in material reductions in spending, but it's also saying it doesn't expect significant impacts from tariffs on economic growth. They do expect the U.S. debt will rise to about 134% of GDP by 2035.
That's right. Moody's downgraded America's credit rating from AAA to AA1, officially turning Uncle Sam into that broke uncle who keeps borrowing money and forgetting your birthday. For those keeping score at home, this is the first time in history Moody's has pulled Uncle Sam's platinum card. And now, with all three major agencies, Moody's, S&P, and Fitch, giving the U.S. a fiscal side-eye, America's credit score looks more like a subprime punchline. Moody's blamed spiraling debt, interest payments that look like defense budgets, and a Congress that couldn't pass a budget if it came with free lobbyist donuts. They even warned that federal deficits could balloon to 9% of GDP by 2035, meaning the phrase risk-free treasury now belongs in the fiction section. But amid this slow-mo fiscal dumpster fire, Bitcoin just kept chillin', holding steady above 100K like it's watching Rome burn from a rooftop hot tub. Altcoins wobbled. Bitcoin didn't flinch. It's not acting like a speculative asset anymore. It's behaving like a damn vault made of math. The safe haven narrative, it's not a meme. It's monetary evolution. Bitcoin isn't the exit sign anymore. It's the front door. I'm Max Voltz, and this is CryptoWars, where the government loses its credit and Bitcoin gains yours. And just as America's credit gets downgraded to Banana Republic levels, the titans of traditional finance are moving out of treasuries and into Bitcoin. Fidelity just dropped a spicy $70 million on Bitcoin, lighting up the crypto world like a flamethrower at a fiat funeral. The move, revealed via Crypto Rover, comes as Bitcoin holds firm above 100K, further cementing its safe haven narrative. This isn't some fringe crypto fund doing the buying. This is Fidelity, a multi-trillion-dollar asset manager signaling loud and clear. Bitcoin is no longer a curiosity, it's capital preservation. The market didn't miss the memo. Bitcoin jumped over 3% on the heels of the announcement, while trading volumes surged 18% on Binance and Kraken. Ethereum got a sympathy pump too, up nearly 3%, and Bitcoin futures open interest spiked 12%. Wall Street's now placing real bets, not just watching from the sidelines. Even equities caught a whiff, with crypto-adjacent stocks like MicroStrategy and Coinbase seeing green. This is no longer crypto versus Wall Street. This is crypto becoming Wall Street's plan B. And just when you thought Fidelity's $70 million splash was big, BlackRock shows up and flexes twice as hard. On May 17th, BlackRock reportedly bought a jaw-dropping $130 million worth of Bitcoin, according to Crypto Rover. That's not a buy. That's an institutional blitzkrieg. BlackRock doesn't just move markets, it creates gravity wells. And once they go in, others follow. Sure enough, crypto-related equities like MicroStrategy jumped 4.5%, Coinbase popped 3.8%, and even the S&P 500 ticked up. Classic risk-on ripple effects. From a trader's POV, this isn't just bullish momentum, it's full-blown confirmation. RSI hovered around 68, flirting with overbought territory, while Glassnode showed a 15% spike in wallets holding more than 1 BTC. ETF inflows exploding. BlackRock's own IBIT Trust saw 5.2 million shares traded in a day. This isn't retail hype. This is structured capital shifting regimes. The correlation between Bitcoin and the Nasdaq now sits at 0.75, meaning when tech rallies, BTC rides shotgun. If you're still on the sidelines, here's your clue. The titans are circling Bitcoin like it's the last lifeboat on the Titanic. But while BlackRock is making real Bitcoin moves, one Alabama hacker just learned the hard way that fake ETF news still comes with very real prison time. The DOJ just sentenced 26-year-old Eric Council Jr. to 14 months in prison for hacking the SEC's official X account and posting a fake tweet claiming spot Bitcoin ETFs were approved. The stunt sent Bitcoin soaring by over $1,000 in minutes. before crashing $2,000 just as fast when the correction kicked in. It wasn't just a prank. It was market manipulation in a meme wrapper, and the feds weren't amused. Counsel pulled it off with a SIM swap scam, hijacked someone's phone, broke into the SEC's account, and dropped the fake ETF bomb. The SEC's comms team probably hadn't even finished their morning coffee before the entire crypto market was whiplashing. Counsel was paid in Bitcoin for his part in the scheme, which is just the cherry on top. The DOJ made it clear. Spoofing a federal agency to pump the market is gonna land you more than a Twitter ban. Acting FBI Director Darren Cox called it a calculated criminal act, meant to erode trust in the financial system, which is funny, considering Wall Street does that daily with no consequences. But hey, when you're not wearing a suit, the system suddenly works. And after a hacker tried to fake Bitcoin adoption, here comes a healthcare company ready to drop a real $1 billion on it. Basel Medical Group, a NASDAQ-listed healthcare firm, is in exclusive talks to acquire a jaw-dropping $1 billion worth of Bitcoin. That's right, scalpels, stethoscopes, and sats. If the deal closes, it would be one of the largest Bitcoin purchases ever by a healthcare company, and a landmark moment in the cross-pollination between crypto and medicine. Basel isn't just hedging inflation. They're betting that Bitcoin's transparency, security, and decentralization can eventually solve more than just financial headaches. We're talking secure medical data, decentralized billing, and privacy solutions built on blockchain rails. This move doesn't just scream diversification. It signals a shift in how heavily regulated industries are beginning to see Bitcoin, not as speculation, but as infrastructure. And let's be honest, if hospitals are now choosing code over cash, what excuse does your portfolio have? Basel's play could open the door for other medical institutions to dip into Bitcoin for treasury management, inflation protection, or just plain forward-thinking optics. It's not just about price, it's about positioning. And Basel's positioning itself as the first healthcare heavyweight to strap on laser eyes. That's it for tonight, digital dissidents. And remember, folks, this transmission runs on sats, sarcasm, and the slow death of trust in central banks. So detonate that subscribe button like it's wired to Jerome Powell's printer, and help us keep these broadcasts flowing free and uncensored. I'm Max Voltz, and this is CryptoWars, broadcasting truth from the belly of the fiat beast. Good night. Stay sovereign and stay spicy.